Well, we are seeing a bit of a rally right now in the equity markets, and Ford, one of the shares on the rise, posting a second quarter loss that beat Wall Street estimates. The only big three automaker to turn down a government bailout, reduced expenses, and increase its market share in the U.S. Well, joining us now with a closer look at the numbers is John Wolkonowicz. He is senior auto analyst at IHS Global Insight, and earlier in his career, he played a key role in developing three of the best-selling and most profitable vehicles in the North American market. John, thanks so much for being with us.
Good to be with you.
Okay, so the big, the key things here for Ford: cash burn improving quite dramatically in the second quarter. But what about its debt?
Debt is still high, but there was some debt restructuring that went on. You know, in large measure, Ford has achieved much of what GM and Chrysler did in bankruptcy without having to do bankruptcy. So Ford still remains competitive.
How was Ford able to do that? Explain to us, as you go through the numbers, how Ford was able to do this without having to go into a structured bankruptcy.
The big difference was the $23 billion loan that Alan Mulally took out in 2006. That made the difference between sliding through without government aid and having to seek government aid as their competitors did.
Okay. Well, John, I want to get back to the cash burn issue at Ford. Coming down to $1 billion in the second quarter, down quite a bit from the first quarter at $3.7 billion. The trend appears to be in place. What can we expect for the current quarter and the second half of the year for Ford?
I would expect an even further reduction in cash burn in the current quarter and the full second quarter of the year. I'm sorry, the third quarter of the year. All of Ford's restructuring activities are continuing to come into play now. And as each comes into play, the cash burn will go down.
So where does that leave? No, go ahead.
They have a deal with the UAW to fund part of the Viva with stock. They have some debt restructuring, and of course they are going to have another white-collar layoff.
So where does that leave sales for Ford? What is your projections for the second half of the year?
Well, Ford looks good for the second half of the year, and you know, it's both because they have products that are exciting to the consumer and that are being rated as being very high quality, but it's also because there are some American consumers that are shying away from General Motors and Chrysler because of the bankruptcies, and those people are going primarily to Ford. What products
in particular are getting consumers excited that you're seeing?
Well, of course, the new Mustang, which just came out about a month ago, that's certainly exciting, the 2010 Mustang. The Ford Flex is gaining in market share, and they're about to launch the new Taurus, which I think will certainly be the leader in the large car segment.
Then when do you expect Ford to get back to the sales levels or the volumes that they saw before this crisis happened?
Well, that's going to happen as the market improves. You know, we're looking at a market improving to about 15.5 million units by 2012. So at that point, you know, that's kind of back to normal. That's probably where we're going to see Ford return to full normal.
At that point, where do you see Ford positioned vis-a-vis GM, Toyota here in the U.S.?
It's probably going to be a dogfight here in the U.S. for #1 position between Ford and Toyota for the foreseeable future, with General Motors in third position.
Okay, and Ford reiterating today that they are going to see an operating profit in 2011. Are you fully confident that they can reach that goal?
Our numbers are not quite as optimistic as theirs are, although because the call isn't fully over yet, I haven't seen all of their new numbers. But the numbers that I have seen, we're a little more pessimistic than they are, but we certainly feel that they will return to profitability reasonably soon, probably either on their schedule of 2011 or certainly by 2012.
In the midst of that, though, John, as you know, they're going to be implementing a lot more restructuring. Some have talked about selling off more units. What could you see that they could sell off in order to raise more capital to take care of this debt load?
Well, of course, Volvo is the one that jumps right out at you. They're actively trying to market Volvo right now, and apparently there are some concerns that are starting to express an interest. So that would be the first thing I think we could see go away.
Anything else?
There could be some component activities that they could offload. I haven't actually studied that part of it.
Okay, John, but thanks so much for joining us. John Wolkonowicz, Senior Auto Analyst at IHS Global Insight, talking about the outlook for Ford.